let me ask you about what you see as being the big global risks. I mean, so far we've seen growth momentum for the global economy look pretty strong. The IMF as well as the World Bank both have got good forecasts for global growth. What could turn the party around?
Well, I think that the momentum is good, but the fundamentals are not so good. Yeah, you see now trade is rising at about 4%, so it's higher than the GDP growth rate. So it means that the economy is pretty healthy. Growth is pretty healthy. But on the other hand, we see interest rates are too low, and the fiscal deficit too high. So it means that the growth we are seeing is supported by very unhealthy policies. So this is where I see that if the bond market is spooked, we have a global bond bubble, right? So bond yields are so low. It cannot be, because governments eventually don't pay their debts. No, eventually they borrow more and pay off borrow new money to pay off the old money. Eventually, all governments default. So I don't understand why interest rates are so low. If suddenly there's a bond market sell-off, the global growth can be derailed. Would a bond
market sell-off be your number one risk today?
Well, not short term, because central banks are coming to buy bonds. So they have a quantitative easing. They need to maybe to sell some bonds. They are talking about it. But if the bond market suddenly crashes, they come in to buy bonds. So this growth is really supported by these unusual policies. Eventually, I think the growth rate will come down because productivity is really low. We are not seeing productivity anywhere. In China, productivity has come down a lot. In the United States, productivity is very low now. So I think that the growth rate we're seeing now, there is momentum, but it will tape off.
I'll end by asking you about employment. I mean, globally today, unemployment, is at almost a historic low. But in India, this is one of the key challenges that we're faced with. From a policy perspective, what to your mind would be the need of the hour?
Well, I think that in the developed economies, workers have moved into the service sector, basically working at a Starbucks, so that kind of thing. They have a job, but they're not happy. That's why politics is pretty unstable. But in India, it's you need to look at the economic development as a huge long-term stimulus project. Put people to work. So if you have building highways, cities, people have jobs. Then you pay them money. It's okay, because you say that you save the money to buy the properties you build. This is a virtuous cycle. See, that was the idea in the 1930s with Keynes building infrastructure spending. But now it's not appropriate for developing economies, but for emerging economy, that still works. It's economic development is like a huge Keynesian stimulus project.
The big risk for global growth. We're here in Russia. There is a possibility and a threat of further sanctions. There is, of course, the uncertainty with respect to the Iran deal. What to your mind could be the destabilizing factors?
I think these are really noises. The oil price now is getting close to $80. So
you think that there's room for oil prices to move higher?
I think not much. I'm not in the camp that it's going back to $100. I don't, because China is not growing at 10%. China is growing at basically half as much. So I don't see that. This optimism about oil is unwarranted. I think $60 is more like a reasonable price, not $100. But I think that with oil price at this level, the unstable parts of the world are getting money. So I think that it's not going to be so stable, unstable. When the oil price crashes, then we need to worry about the instability. When the money is going around, I think it's going to be okay.
It's going to be okay. Andy Xie, it's always a pleasure. Appreciate you joining us here on CNBC TV 18, and thanks very much for your time.
Thanks.
With that, it is time for us to wrap up this CNBC TV 18 special. From all of us here, goodbye, and many thanks for watching.